Hello, everyone. My name is Dan Shanelaber. I'm a partner in our transaction advisory services practice, where my team focuses on helping clients navigate through acquisitions, as well as preparing their businesses for sale and successfully closing on the transaction. I will be moderating our discussion today with Amy Julian. Amy?
Hey, good morning, everybody. My name is Amy Julian. I'm a partner in our consulting practice. I work on our strategy and transformation team, and we do a lot of the process and digital transformation that we'll be talking about today, really throughout the life cycle of a business journey. So really excited to be on the call today.
So, Amy, what will we be covering today?
All right, so we've got a couple things. First, since we are talking about exit planning, we want to talk about what really is going to drive value. We're also going to look into how prioritize what you want to do in terms of process and technology investments. We'll go a little bit deeper into what does that actually look like for specific process areas. And then we'll talk about how to make sure you actually realize some of those benefits. But, Dan, I also wanted to hear from you. When you're working on buy-side due diligence, what are some of the things that your team or the buyer is really looking for?
Yeah, our diligence process is a very thorough process, but some of the key items that we tend to focus on are the quality of the financial information, the quality of the management team, diversity of the customer base. We tend to take a deep look at margins in the business and see how those are changing over the periods that we're looking at. And we also take a look for the ability for the company to continue to grow. Definitely, the current state of the business is important, but also where's the company going in the future? So what do you think this has to do with the process and system improvements, if any?
There's a lot of meat behind that, right? If you're looking at margin improvement or the revenue enhancement and being able to tell that story, those are all things that can be accomplished through changes to processes and systems. So I know digital transformation is a buzzword right now, and it's a lot of what I'll be discussing today. So I think it'd be helpful just kind of define what that is. I define it as really when technology gets used across all areas of the business. A lot of time that really fundamentally changes how you operate, how you might interact with business. Some of those biggest value drivers are around actually creating a new business way of working. But it can also be a cultural change. To be successful in changing process and technology, we really need to be open to continually improving, trying new things, and being able to react quickly to failure. And then finally, I would say digital transformation is something that you can do just to help maintain your competitiveness. We are looking ahead, next 5 years. Those are probably going to be even more disruptive than the last 15 years. So really trying to get ahead, understanding what you need to do just to keep up with the market is also critical here. So we've kind of bucketed this into 3 main areas where digital transformation can really drive value if you're planning to sell, within the next couple of years. First of all, we've got revenue growth. This is going to create that story for a sale, the ability to add customers, potentially diversify the revenue base over a decent time period is going to be really critical. Typically, talking to Dan, talking to our evaluation team, that is about 12 months of consistent, repeatable growth. But I think if you have some of the basics behind there, being able to show that in a shorter time period still matters. But obviously, the longer that you can demonstrate that, the better that story is going to be. And with that, it's also worth noting at this point, not all businesses are really saleable. Do you have enough value to be able to transfer that to a buyer? Sometimes we work with businesses like contracting, where it's really all based on a backlog of potential sales, but it turns every single year. So to be able to demonstrate that, hey, it's the asset value plus these long-term relationships, plus I've got really good customer base, is what's going to help differentiate you when you actually go to sale. And the diversity of that as well. So if you're really deep in an industry, that can be great, really consistent revenue, but it also might be a risk factor that you have to account for when you are doing the due diligence. The next bucket here is that financial consideration. We hear a lot of stories about deals getting delayed because of challenges validating numbers or just being able to get to some of the basic financial data. This is really an implicit desire from a buyer. They assume that you're going to have this right off the bat. And they also assume that you're going to have the ability to dig into some level of detail. If you can't, that's going to increase the risk in the eyes of the buyer, and that in turn is going to decrease the value in your exit. What that means for technical evaluation, I think that assumes a higher discount rate, and the transaction itself could get that lower multiple that you don't really want to have out there. So the final bucket here, protecting margins and showing evidence that your organization could scale. And this might depend on the buyer, kind of what they're interested in, is going to help create that story of a well-run business. Sometimes we'll hear sellers saying, hey, like, I know that these opportunities exist. I just need more time, more resources, funding, whatever that might be. And this could really take a ton of growth. At the end of the day, being able to show what tactical steps have been taken in order to start scaling, and potentially the metrics around what's going to make that difference, are going to be able to give the buyer the confidence that you can actually execute this. Otherwise, the buyer's taking on that risk and will likely want to set a value that is commensurate with that risk. Along with this, tracking cash burn on cost management is going to be critical. Cash flow is something that you'll hear me kind of talk about throughout this presentation. Understanding where that's going at any different point in time is something that's highly valuable during that sales process. So I also know there's a lot of discussion about, whether investing in technology and process changes really pays off. And frankly, it's not that easy to unwind the impact of an organization, because there's usually more than one type of change that's going on. So what you see on the right hand of this slide is something from Harvard Business Review, where they went out and surveyed over 150 different companies. This covered a number of different industries, so it's not specific to one industry, but they looked at 3 different types of digital transformation. First, they were looking at building new digital businesses. That's going to fall into that revenue growth bucket. They also look at strategically transforming core business with digital tech. So how do they do the day-to-day more effectively, more efficiently? That frankly is going to hit all 3 of those in some form or fashion. And then updating that core business technology to ensure future competitiveness. Typically that maintains either revenue growth or that cost management side as well. So they then stratified based on the tech intensity, which refers to the extent to which employees drive digital innovation and achieve business outcomes by using technology. That then separated the respondents into leaders and laggards, and they looked at revenue growth over a time period, as well as the compound average growth rate. And you can see a clear differentiation in the results that were shown over that business. I'm super curious to see this, kind of given the current industry environment. But over a long time period, we do expect this to kind of maintain and potentially even grow that gap even larger. So while it's still hard to measure, there does seem to be evidence that investment in process and technology can really drive value. But, Dan, I'm interested in what you hear from investors about this.
Yeah, I think you kind of hit on it with the financial confidence. I think it all starts with the financial information and its reliability. The quality and reliability of the financials can go a long way in helping a buyer determine their value of the business. If the financial information isn't good, then it might be a no-go from the start from a potential buyer. Buyers are also looking for a business that is positioned for growth for the future. After an investment is made that they're making, it's contingent on where they think they can take the company, not just the business in its current state. Overall, we're seeing investors like businesses that have positioned themselves well for improvements in process and technology.
Yeah. How do they look at kind of the organization and the people in there, especially as it pertains to like the technical capabilities and willingness to change?
Yeah, I think it's a very important point. I always say that the financials and the quality of the financials is something that you have to have from the start, but the people go right along with that.
Awesome. All right. So we're going to dig in to a little bit more detail of what I mean when I say like there's process and technology improvements within these buckets that drive value. So at the end of the day, there's a lot that you can do to prepare for an exit and improve that overall value, but prioritization is going to be critical. One of the first things to really understand kind of internally is what is that exit timeline that you're planning on? Is this something like where you're actively already looking for a buyer? Is it something that you would like to do in 1 to 2 years? Or is this something that you're just trying to plan for 5 or 10 years out that might look looking for a buyer? There's going to be quick wins that can drive value, but some of these transformation projects really take some time to show results. We'll talk through what those different stratifications are as we get deeper into this. but we are often developing roadmaps for clients that really force them to prioritize each of these projects based on strategic goals. Those are going to be organizational level strategic goals. Someone might actually tie to your exit plan, but they're also going to be how do you want to interact with technology on a day-to-day basis. So we'll focus on the macro processes, typically when we're talking to our clients, that are behind these different areas. So if I'm starting to dig into revenue growth, this is your ability to convert sales to cash, and it's going to be critical during the M&A cycle. Revenue without cash flow isn't nearly as compelling to drive that multiple and that valuation. However, the bigger that you get, that margin might tend to shrink. You have to get really competitive in that pricing process. And if you're in an industry where cost is king, those bigger projects are going to drive really competitive pricing. You want to have a strong process for how quotes get put together, the assumptions that are used in that process, and that is the lead to quote process. So a couple of questions you kind of ask yourself, like how effective do you feel the sales team is? Do they take a long time to develop a pricing proposal? Is that consuming and really difficult for them to do? Is the sales team really only looking at top line growth, or are they also able to look at margin when they're trying to negotiate a deal and get that sale to completion? Ideally, you can be able to quantify this for the due diligence period and have something to lean back on. Coming out of that, cash flow, again, so critical here. But during that sales process and the quote to order and quote or order to cash cycle can really help stabilize your daily sales outstanding. This particular process is going to cover all the steps between finalizing that customer order, setting in place a contract to make sure that you don't have any price drift, and then making sure that you have a collections and cash application policy that gets it processed as quickly as possible. We see a lot of issues with that, frankly, and it's not always necessary if you've got the right process in place. Those are kind of the internal process. When we get to like a sales intelligence piece, that's where you're starting to enable insights about how customers interact with you as a business, how they might actually use your product, and how they react to pricing or availability changes. Costs to serve a customer are going to vary, even down to a product level, and knowing which customers are the most profitable and how they consume different resources of your company are going to be really critical going forward. That's going to help you make a decision about how to sell and what to sell to any given organization. Sometimes I'll see a sales team or even the inventory management team not wanting to miss a sale. So they don't understand, though, the cost of jumping through all of these hoops to maybe change order allocation, to get an order out the door really quickly. If we can make that a conscious decision and say, hey, this is the cost of doing that, all of a sudden that starts to change the conversation. And it makes it a much more equitable decision point for the business overall. Another really good example about sales intelligence is we worked with a consumer retail client who was working in perishables. Their EBIT to margin was only about 1%, but you saw through that valuation period that it was ticking up over 2%. So what had happened is they brought in the team to really look at that costing process. They focused in on that margin and then took that back to the sales team to say, hey, how do we really focus on the customer base with the product line there to focus on where we can maximize margin? So that was all part of that sales intelligence that you could really get and leverage for insights if you've gone through digital transformation. Once you have this, it can also lead into that targeted marketing. This also is going to leverage data and insights to get really specific marketing strategy in place and ensures those marketing dollars get put to work for those highest return assets. One good example here is we had an organization boost traffic to their website by over 200%. And that was just with the targeted ad campaign that leveraged some digital media. But knowing who they are through that sales process, through the right master data behind that was really critical. Another aspect of this is if you are going to look to increase margin, you might have to reach a new customer base or top line revenue. So we had a local dealership that was working out there. They wanted to do this, but they knew that they had to reach outside of their core target market. So they had a totally different digital strategy where they had to find new clients that were potentially outside their base. And there's so much you can do in the digital realm right now. And finally, in this kind of bucket, customer retention is really critical. Tech and data are huge enablers of that right customer service level. You want to provide customer service, but sometimes that can also be very, very costly to do. I mean, I'm sure most of you guys have experienced chatbots online asking to help you. Sometimes that can actually be really highly effective. And then having that second layer in place to actually get to a person might be that right level of service for your organization. We even got a tool that we've used in some customers. We can really get early insights into customer loyalties that can actually provide proactive actions to make sure that you maintain those customers. So really interesting things that can be done with some fairly basic technology today. Within financial confidence, so I kind of think of a couple of key areas. So cash flow, mention this again, especially in the startup world where organizations might be pre-revenue, just having that visibility into cash flow, knowing where your spend is coming from, and being able to manage it effectively is really, really critical. There's a lot of financial tools, and having this consistent process behind those are going to bring a ton of visibility and really allow that organization to have the right amount of cash on hand to meet operational requirements, debt covenants, whatever is needed. The process around month-end reporting, for a lot of the business we work with, it's really slow and oftentimes really frustrating. Numbers might not tie out very easily. You've got a 20-day turn, reconciliations don't tie up. And there's a lot that we can do for business that really helps reconcile this a lot faster. We just did some automation where a bank reconciliation process took 2 days out of an individual's monthly time. The automation actually allowed them to reconcile weekly, and I think they intend to move to daily, not just monthly, and all it really needs is a push of the button. So there's a lot that can be done there. And then, I mean, even just thinking through on the process side, that clean general ledger environment can lead to a lot cleaner financials. A lot of companies we work with have a ton of accounts that require more maintenance than the value the visibility actually brings. So we often advise clients, hey, reduce the number of accounts. Caveat on this for exit planning is that it should be done as far in advance as possible to make that year-over-year comparison a lot easier. Standardizing your chart of accounts across subsidiaries. And then if you need to be able to quickly get answers out of anomalies that get into the numbers, having that master data plan so that you can dig in and people know where to go. One thing we saw is one really well-run company had a blip in kind of the repairs and maintenance, and it was being reviewed for the due diligence. They were super quickly able to dig in and say, oh, that was due to, one-time, new repaving of our parking lot. We do that every 10 to 15 years. That was able to be defined separately and did not impact their overall multiples. So those are the kind of things that you want to be able to dig into very quickly and have an answer for. The other thing to note here is we do still see companies going to sale just using spreadsheets. That's going to be a big red flag that comes up. And Dan, you probably see the impacts of not having a good process in tech and financials quite a bit. For me, this one really feels like table stakes just to get the basics down. But what does that look and feel like when you're deep into due diligence?
Yeah, absolutely. I mean, you're hitting on all the items, and they're bringing back good memories, or interesting memories, I should say.
Sure.
I mean, I always say that the financials, having good financials and providing quality information isn't necessarily going to increase the value of your business. But the key is here to make sure that your information is good enough so that you get the value that you do deserve. Because while it might not increase, it can, detract from the value of your business. We've had situations where we've come into a deal and it falls apart completely because a seller is not able to provide quality information to us, and therefore we can't really get our diligence done. Other times we see that the final selling price of a deal might be reduced as a result of poor financial statements. When you get into diligence and you start to ask questions about the financials and the seller does not have good answers for it, it can obviously be a red flag to a buyer. At the end of the day, as with anything, you have to be prepared for the process.
Cool. All right, so last bucket then is cost management, scalability. The main macro process here is going to be source to pay. And again, what matters in this group is managing your margins. If you can show like, hey, revenue is increasing, but costs are increasing even faster, that's going to throw some red flags. So you want to be able to manage costs, whether that's due to external factors or internal management of operational kind of ways of working. It is a responsibility of leadership to determine how best to manage this effectively. So that source to pay process, it's one of those things that can be really challenging to both scale and control at the same time. We definitely see organizations struggle as they're growing. They need to start putting in more controls and more process areas. But if it's not managed well, you do see that cost really start to expand, both for OpEx and CapEx expenditures. Any oversight in this really should include investment in technology. That should be planned and purposeful. You definitely see organizations as they grow start buying different tech sets that may not work well together, or they actually result in silos within the organization too. Those are things you definitely don't want to have happen and will lead to inefficiencies down the road. And then just making sure that you have that understanding of contractual supply agreements and being able to show those are systematically managed. That can be really easy for the organization to go back and refer to. And something very simple in terms of tech solutions and process can actually help make that really core to the sales process. Hand in hand with this, you've got supply planning. This is kind of around inventory. We know that having too much inventory, it leads to cash flow problems. Not enough, it's going to lead to lost sales and higher costs. And I think a lot of organizations that do have inventory have felt that whiplash over the past couple of years. Really tough to manage, but there are tools and kind of methodologies out there that can help narrow in on what the right level of inventory is, given a set of assumptions. And being able to model that, model different scenarios is something that can be really, really powerful. And you can do this on an individual unit basis now, if you've got that right tool set in place. Along with that, and for organizations that are based in goods, the stock to dock process has undergone a ton of transformation. In order to compete, organizations with warehousing requirements really have to have strong process and potentially supporting systems such as a warehouse management or a transportation management tool. Those are all things that can come into play depending on your maturity level and what your overall goals are. And finally, this cost management, scalability, that's going to be where your industry creates that critical difference. Understanding what are those cost drivers and looking at both the prices and usage factors are going to be critical. And having a tech set that allows you to do that is where you can have that differentiation as well. This is also the area that can generate really an immediate lift to EBITDA and can more easily be tracked to specific initiatives. Some of those other pieces are tougher to say, yes, I made this digital transformation initiative, this provided value. That can be really tough to extrapolate on revenue and financial confidence. Cost management, scalability often has a very direct connection. And finally, just a quick note on scalability. This doesn't just refer to moving from paper-based or manual data entry to automation. It can also mean that there's decision-making capabilities across the organization, not just with one person. We had one client with a small production facility that they're planning to grow significantly through investment that would essentially quadruple their capacity, but their business process for ordering inventory, receiving, applying cash, and reviewing those purchase orders were really just held by one person. And they were all to kind of trigger those discounts. So they had to rethink workflows, modify system configurations, and invest in some of the basic training to get other people able to manage that process. Another really good example is, seller had identified some actions that would result in additional value, but the buyer just wasn't willing to pay for that. That's where that kind of risk factor starts to come into play. And what you could do to kind of mitigate that is you could do another valuation saying like, hey, if I was able to do these things, what would that be? Would my valuation get me to where I want it to be? So there's definitely a lot of things that you can do within these three buckets through that lens of process and technical improvement. Then how to prioritize that is going to have to align with your strategy and the overall timing for the exit plan. Cool. All right, where do you want to go next, Dan?
Let's dig deeper on this. What does it really look like in terms of what actions an organization can take and the potential impacts on the business?
All right, sounds good. So if we dig into, there you go. The order to cash process in particular. So this is something, getting cash in the door, making sure that your customers are happy, that they're going to come back, are all going to be super critical. We do have some actual related resources on this. I think Jenna is sharing them through the chat if anybody is interested in learning a little bit more. But this process is really going to tie you close to the customer. So what this slide has is some research from APQC that consolidated data from over 175 organizations. They considered that 12 of those were top performers, defined based on whether or not they had a global order-to-cash process owner, whether or not they managed master data at an enterprise-wide level, whether they have a top quartile end-to-end order-to-cash cycle time. So that is from when the order time is placed to when that cash gets applied and hits their books. So a couple of really interesting things. So order visibility, super hot topic right now. Think Domino's Pizza. I cannot tell you the number of times when we're developing these something a little bit custom. We say, I want a Domino's Pizza app. Like, I want to know where this process is and who's got the ball on it. Super popular. I know it's been out in the market for a while, but I still hear that coming up. People want to know. To be able to do that, you have to have really strong quality of data. This means that key pieces of information have to be gathered, standardized, and really complete as possible. So data quality is going to be one of those issues where if you're implementing a new technology, you have to have it at baseline. It's something too that we have seen over and over delay the implementation of digital transformations. And it's not as easy as people think it is. You might have, data set that people have grown over time. We had one customer with 10 different types of red that we were trying to get them to standardize down into 4 or 5. And man, those discussions took a long time to figure that out. So that's some of the work that has to go into that. But then just making sure it's even complete, right? That first bucket there is showing that, hey, those top performers really do have a requirement to say, you need these core fields in customer setup and in product setup. And that's going to give you some of that data that you can use to create better insights. The integration of customer data is also something that can be a huge differentiator. If you're a big enough organization that you're using a CRM system, but you've got an ERP as well, and maybe have a third system out there for supply management, being able to standardize and make the information the same across all systems can be a huge differentiator. Saves time, you don't have somebody entering it in, and you're not trying to figure out, hey, I just placed this order, close this lead in my CRM, what's the right customer that I want to book this to in my ERP system? So that can be something that's really big. Oftentimes that is resolved through like an actual integration that gets set up. Sometimes you use RPA if it's not that easy. But there are a number of ways to do that. And then this last one of configure, price, and quote, and this order visibility. So this goes into the complexity of like what you're selling. If you're selling a discrete item, it might not be that difficult. But if you're typically bundling things, or you've got a service industry that also uses, parts inputs, being able to have kind of that automated configure, price, quote option can be a massive differentiator, just in terms of timing and consistency overall. That can often get done through something like a CRM. There's a couple of other tools out there that you can use to make that really easy. I've seen it done in Excel, but you do really have to think through like what are all those kind of business decisions and criteria to build out those requirements. This can also be like a really big change for the sales team. So initially, sometimes we go through a change management process where, hey, they don't like it. They don't have as much freedom or flexibility in terms of like how they discount, how they sell to people. So just making sure that you have a really strong message out to that sales team, but also understand the why, and potentially tying their own results back to that margin can be a differentiator here as well. Also within this area, there's a ton of opportunity for process and automation. We see a lot of interest in getting generated right now. And if you're still keen in orders, don't feel bad, you're not alone, but there is a ton of opportunity to manage that paperwork and the sales process through digital tools. We've got one client right now who needs like 60 pages for the sales process. They've got a lot of documentation that requires signatures from the client. And we're working with them to figure out how to digitize it and enable virtual signatures. So they're not trying to key in all the paperwork and bring that along to every sales visit that they have. And I do think we have a really great path forward with them. So super excited to see that one come to life. With this, that customer web portal piece of it, so this is something that has become more and more critical across lots of different organizations. Whether or not you're working with a B2B client or direct to consumer, so being able to say, hey, this isn't going to get in time, or I need to delay this or cancel this, or I got a short shipment. Through that customer web portal is where you start to get a lot of efficiencies and kind of self-service ways of working, so that it's not all on you, it's kind of a shared responsibility. If the sales team has access to that, sometimes even better, right? Like, definitely have seen organizations where the sales team does not know that there's outstanding AR. They haven't gone back and select that cycle, and yet they're still out there selling even more. So giving them that insight into everything that's going on with that customer web portal can be a critical differentiator overall. And in that manual order entry, and so that's kind of a subcomponent of that first one out there. You can automate this entire process really effectively, but even just getting that order into your ERP so it can be processed, staged to actually complete the work or ship the good out can be a huge differentiator. And you see that, pretty much you've only got a couple of the top performers who are still doing some level of manual order entry, but all others within that are doing a lot more. It's a really big difference in the top performers versus everybody else. And this last bucket, so you start to kind of see how improvements in the order to cash process, whether that's through kind of process changes or the technology behind that, can generate real financial results. So when you go to the cost bucket, how many resources does it require to actually process the order to cash? That's going to be a key differentiator. There's a 10 people difference in this number, which can be pretty massive when you're doing this at scale. And even in a smaller organization, that's going to be a massive differentiator and make that a lot more consistent over time. The other piece of this is days sales outstanding. Not as big of a difference here between top performers and everybody else, but a lot of times we see that tail and the ability to collect at 100% being something behind there that generates some really good results. All right, so lots that you can do overall that have impact to the bottom line and cash flow.
So Amy, what's technology versus process in this?
And I would say, process has to come first. Tech on top of bad process is just a fancier and more expensive bad process. But that being said, investment in technology can really help you make that leap in your business operations that process improvement alone just is not going to be able to do. So a little bit of both, but got to get that process kind of redesigned first.
Makes sense.
So let's talk about the different types of technology we see being deployed. All right, so we used to actually show this as kind of a continuum, but that's not necessarily realistic. I think what we tried to do here is really look at it from the perspective of what you as an organization are trying to solve and achieve. And if that goal right now is exit planning, knowing which one to do is going to be kind of critical overall. So core operational systems, that's going to be one of your biggest investments, biggest change, can also drive huge improvements. Especially if you're an organization that's currently running on QuickBooks, but you're growing rapidly, not really able to get deep into the financial results, upgrading into a more robust financial ERP is going to allow you to get that financial information a lot faster. So those are some of those key things kind of overall that can be done. It does take a little bit more effort overall though. Within integration and automation, that's something that you can do. Like if you've got a number of systems maybe already in place, but they don't sync, you've got wasted effort trying to key it in multiple different systems. And that's something that's oftentimes a little bit easier and faster to do right off the bat. So oftentimes you need those kind of core systems in place, you need that overall process, but then you can really look at how do we automate them. That data preparation and migration, I talked about like how critical this is, because you really are not going to be able to get great insights without this. You're also not necessarily going to have time to, build huge base files. You're constantly trying to translate data or making manipulations outside of the system. Those are all things that might say like, hey, I need to take another look at my data governance and do something maybe a little bit different with that overall approach. From that, then you can kind of move on to that reporting and visualization. So we see people say, hey, like I have a ton of information, but I don't know what to do with it. Like I don't get it timely enough. I can't see it. It's not giving me things that I can use to be more proactive. There's a lot that you can do here as well. When you get up into, predictive modeling, artificial intelligence, those are the ones that like we see kind of cutting edge in the market. But it's also doesn't have to be like this huge investment. There's a lot of little like microservices that we call where you can use these tools to do just kind of the basics and get one step ahead of something that's maybe just not working. Similarly with custom development, people hear custom development like, oh my God, that's going to take a ton of money and resources. I really don't know what I need to do. But there's things like Microsoft Power Apps that you can do very low code, very cost-effective options that fit a very specific need that fits your business. So even though some of these sound like they would be really expensive and time-consuming to implement, it's oftentimes not that case. But we are talking ranges of investment between like $30,000 and millions of dollars, depending on the scale and the complexity of your business, as well as what you're actually trying to achieve. But Dan, I'm kind of curious, what happens if all this investment gets made, but the new owner wants to consolidate solutions and technology?
Yeah, it's a key question that you have to consider, and the answer is it really depends. If you're going to be looking at a transaction in the near future, then there's probably other factors that you should consider as part of this. First, how badly is a system upgrade needed? You have to be realistic about the sale price and the investment costs because you want to make sure you are getting a good return on that investment. Starting by talking with your advisors is a key thing to do. Another question that you can ask yourself is, who's the ideal buyer of your business? Part of this also has to do with who you want it to be. If you'll be a platform, and will you be a platform investment, or will you be a potential add-on to an existing business? As a platform company, making the investment before going to market can go a long way in showing that your business is positioned well for growth and also for future acquisitions. On the flip side, if you know that you're going to be acquired by a larger strategic business, it might not be worth the investment depending on your current situation. So lots of factors that you have to consider and making sure that you're thinking about the process and what your ultimate end goal is, Amy. I feel like we're always hearing that the outcome of these investments don't always tie to the business case.
Yeah, it kind of spoke about this early on in our conversation, but the realization of benefits is really tough to tie back to a specific digital experience. So I did a little bit of deeper digging on this as we were kind of talking about this before the call. And you can see that this chart on the left, this is a self-evaluation of a bunch of different companies where they said, hey, the value captured is only about 1/3 of what it was expected to be seen, both on the revenue and on the customer side. Personally, I think it's really tough to know why. There's so many different interrelated marketing factors at play that it's almost impossible to tie it back to digital transformation, especially on the revenue side. Cost side, again, a little bit easier. But if we go back to that first table in the deck, there is a clear difference in performance overall. Tying it back to the specific initiative seems to be where that challenge is. The chart on the right, I think, kind of reinforces this. This is showing top performing companies who are making digital investments do perform well ahead of the rest of their competitors within their market. So we see them, looking at things like a public cloud, that data strategy, having kind of internal practices. So that's managing the internal process, as well as a leadership team who is ready for this digital transformation. So I thought that was pretty interesting. And it highlights that the investment isn't just in the technology itself. It is also in that data and that human capital practice to make sure that teams can actually use the tools that are available to them. So kind of my key takeaway in this slide is top performers are probably doing both the tech investment and driving investment in the organizational changes that are needed to drive real benefits overall. Dan, anything else that you think might drive value here?
Yeah, overall, it's your leadership team. Anytime we're talking about the transition of a business, there has to be leadership in place to continue to run the business and be able to realize some of these benefits that we're talking about here. You're talking about a growing business, not just consistent growth and margins, but the ability for that business to continue to grow. This ties directly into where the business is and the systems that are in place for the business. With exit planning in particular, it's critical that the results are actually showing up in the financial statements or in the story. Amy, what do you think organizations can do to improve the probability of having success with some of these changes?
Yeah, I do think that there's a lot that people can do. So we typically think of this along those 4 pillars. So first of all, I cannot underestimate the value of having the right people in there. That is also just like the alignment of those strategic goals. So knowing what you are working towards, being able to communicate that into the organization, having an understanding of like, hey, who's going to be a little bit change resistant? Maybe you've got some really great employees who have been doing the same thing, working in the same system for 15 years or more. And they are oftentimes really still open to change, but it might be harder to get them kind of thinking about what that future could look like. So just really understand that, look for all of those risks embedded in that, and bring the right team to the table. Drive that excitement, up front. Don't make it seem like it's this really onerous process, because it's not. It can be tough, but if you manage it kind of well from that leadership perspective, it can be a lot of fun too. On the process side, like I said before, don't assume tech is going to solve your process problems. I love jumping in and just designing for future state, but knowing how to get from current to future, you have to know where you've been. Like I could probably ask everybody on this call, hey, how do I get to Chicago? Chicago is where I want to go tomorrow. Dan's going to answer differently because he's in St. Louis and I'm in Dallas today. So you have to know where you're starting at to be able to get that going. Then you do have tech, right? So having that overall view of what type of digital transformation is really critical. We see people, again, kind of going off and buying different platforms, different solutions. One organization that we went with had like 3 different project management tools. None of them talk to each other, so you get different ticketing desks. And it can create a lot of silos and just really bad practices and frustration for the people who are trying to work within those systems too. So having that really clear prioritization overall is critical. And then it kind of comes back to data as well. So there's a lot of things that you can do to measure success. I'm always big when I start a new project, say, hey, what does this look like at the end of the day? And for each different work stream, you can oftentimes have operational metrics that say, hey, did this happen? How are we tracking overall? And I'm able to, collect better, have a faster process time. Those are all things that you can do that help drive people's engagement overall as well. Cool. All right, Dan, let's test your approach. Given what you've learned today, what kind of next steps are you going to take?
You have to be prepared for situations like this. The earlier that you start having the conversations, the better. We deal with a lot of clients that are going through transactions on the sell side, and too many times they're waiting to the last minute to get prepared to go through that process. It takes a lot of time, and it's never too early to start going through that process, preparing and starting to reach out to have those conversations.
Cool. All right, so we do have a slide in here, kind of tactical next steps. How do you want to get started? Start simply. Just kind of figure out, like, you can have that session across probably some of the leadership. Look at what your overall tech stack is, what impact that might have in your evaluation. And that's oftentimes something that you can accomplish through kind of a map, understanding what's in place, where the pain points are, and then matching that up against your organizational strategy. But also, really think kind of outside the box. So I was reading another article today that said when organizations invest in digital transformation, a lot of times they aren't ambitious enough. So really kind of consider what's holding you back from other growth opportunities and throw those on the table too. We do a lot of incremental investments, especially as you're getting closer to that sales timeline, but there might be more that you can do with some forethought and planning. So once you've got kind of that overall approach, do take the time to select and implement the right solution, build that right future process. I've got a colleague of mine who always says shopping is not an accomplishment. A lot of kind of knee-jerk reaction, like, oh, let's go buy, this ERP or this, bolt-on solution that's going to help us. There's a ton of options in the market. Take just a little bit of extra time, do that due diligence, see a couple of demos, make sure that you have your requirement list kind of well-defined, and bring that to the table so you're making a well-thought-out discussion. One other good example is we were working with an organization who implemented a new ERP. At the same time that they implement a new WMS, they did not talk to each other. There was not an out-of-the-box integration. They had to develop this custom, took a lot of effort to get that right. And we kind of asked them, like, would you do that again? They weren't sure. Like, they really had to go back and say, like, hey, why did we select that WMS in the first place? What were those reasons? And did we have that right assumption overall? And in that last piece, build the team. So talked about this a little bit, but you might have to kind of consider some change management, some training. There's different methodologies to being able to implement digital transformation, and they might be different depending on the initiative that you're building to. So there could just be some basic training that happens along the way. But, there's a lot of risk, could still translate into a lot of different cash up front. But if you make some initial investments, I think you've got the opportunity to really get a lot of value out of some of these changes as well. And I believe that kind of wraps up our presentation for today. So we'll go into Q&A. Got a few extra minutes.
Yeah, if anybody has questions, feel free to submit those through the Q&A chat, and we will do our best to answer as many of those as we can. First question I have here in front of us, Amy, is there a time period when it's too late to start making changes when contemplating an exit or change in a control?
Yeah, and that one might be a good one for you. I mean, you kind of see exactly how much data you need to make that valuation and due diligence process easy.
Yeah, absolutely. I mean, I think it really depends on what type of change you're thinking about making. Is it a system change? Is it a process change? I mean, I think some of those processes that you can change that can have, quick impacts or can be implemented fairly smoothly. Those are types of things that you can do a little bit closer to that time period when you're thinking about going to market. As I mentioned before, the earlier you start, the better. I mean, Amy, you can probably give a little bit more information on, say someone's thinking about they need a, major system change. How much in advance should they plan to have ready for that? I know they don't always go as planned. Is there a certain time period that they should say, hey, let's get this time period set aside before we even think about going through the exit process to make sure that we're ready to go?
Yeah, I mean, that can also vary pretty greatly. Typically selection process is going to take 2 to 3 months because you do want to see those demos, make sure you've got kind of the right piece of it. Once you've made that decision, it's going to depend a lot on the complexity of your business. If you're moving from QuickBooks up to like a NetSuite or a Sage Intacct, sometimes that can get done in as little as 4 to 6 months. If you've got, very complex ERP or upgrading to something like a Dynamics F&O, that's going to take anywhere from 12 months to 24 months, depending on the number of business units that are converting, the pre-work that needs to get done, how streamlined the data already is, and how big of a lift it is or how big of a difference it is from your current ways of working. On, the lighter timeline, so we talked about like RPA, kind of automation. I see a ton of interest in that right now. You can implement a robotic process transformation probably in 30 days or less. We had one that was just done in about a 2-week time period. It was really well defined. People knew exactly how it was operating. It involved internal systems, so you weren't having to deal with kind of changing information all of the time. And they knocked it out, like developed it and went to production within 14 business days. So it was really impressive to see. And it saved about a half a day of somebody's time, just kind of manually keying in different parts of data. So lots that you can do, across any time frame, but you do have to prioritize and kind of know what that timeline is overall.
Yep, makes sense.
And Dan, what are you seeing with the valuations in today's markets?
It's an interesting question because we're seeing things changing all the time. I think at the end of the day, what we're really seeing is that for good businesses that are ready and prepared for an exit, they're still getting good high multiples. Yes, multiples have come down from some of the highs over the last couple of years, but for the high value businesses, there's still a lot of money out there in the market, and they're still demanding a high sales price. So if your business is well positioned in the market and you have some of these things taken care of that we've talked about today, it's still a good time to go through an exit process and realize that value in your business.